Alright everybody, welcome to a quick and brief presentation that I'm going to be doing on the topic of Candlestick Anatomy. This is something that was requested throughout the week, so this is all well and good. We're going to be talking about some of the more basic things and basic stuff in trading, which I believe many people just forget. And I think this is going to be a good exercise for everybody to sort of have a refresher in terms of how candles work, how do they print, and why do they print the way they actually do, right? So this is going to be something that's very basic. It's not going to be anything groundbreaking. We're going to be focusing on candlestick anatomy right over here, and we're going to be reviewing some of those things right over here, right? So I just hope that this video will be helpful for you guys in terms of, once again, remembering a little bit of the basics in terms of candles. So we're gonna get started right over here. Okay, so the very first question you may be asking yourself, right? Why do candles matter, right? Why are they important? Which essentially they are, right? So obviously, as retail traders, and this is something that we have to understand, the only thing that we see with 100% guarantee in the charts, in the market, are candles, right? We don't see volume. Once again, you can try to add the volume indicator to your chart. It will just show you past volume. It won't show you sort of what's happening right now, which is why you would want to use volume for. Right? Once again, if you do have a way of using volume, that's great. I just think it's useless because, once again, forex is something that's decentralized. You can call it the Wild West. Everybody is able to enter, leave, manipulate here, manipulate there. So there's no point in trying to sort of understand and predict volume because you're not gonna sort of have a good time doing that, in my opinion. So we don't see or we don't know about the orders in particular and the order amount. Once again, you can try and read order flow, which is something that we teach and that works very well, but you don't have access to who's placing these orders, why are they doing so, and what's their plan with those orders. Okay, so understand that idea very well. You don't know who's participating. You don't know when and why are players leaving or entering the markets, right? The only thing that we see with precision and guarantee are candles, which essentially is just a visual reference for how price is behaving, right? Because in every given second, price is moving up or down, and at the end of a particular period, you will have a candle that represents that price movement. Okay, something that you have to understand about candles. Candles are nothing but the visual representation of price movement, and they print every particular section. You will see every 5 minutes you get a new candle on the 5-minute chart. Every 15 minutes you will see a new 15-minute candle on that 15-minute chart. Okay, that's just essentially what candles are. It's just a visual representation of price movement. So now that we understand that, can move on. Once again, do not confuse yourself. We're not going to be talking about any of these patterns. I don't think they're useful. I don't use them. There's no point in that. Okay, I just wanted to show you and make you understand that there's only a handful of candlestick structures and they repeat over and over. And here we have some examples, right? You have a candle that looks like this. I can guarantee you that's not the first time you see a candle that looks like that. You have a candle that looks like that. You have a doji over here, right? Another doji, another bearish candle, another bullish candle with no bottom wick, which is something that's not very frequent, but they do happen. And yeah, that's essentially what I wanted to present you guys with this particular slide over here. I don't want you to focus on the patterns and whatever these things over here may be called. I don't think they're helpful. I just wanted you to make you understand that there's only a handful of candlestick structures and they repeat over and over and over and over again on each and every single time frame. Okay, it's not like there is 1,000 of ways candles can look. It's just they're very similar in terms of how bullish candles look, bearish candles look. There's a handful of those and they repeat. So let's go over here. Let's get a little bit into the nitty-gritty of the presentation. So how do candles really form, right? So it is very straightforward. It says, let's see over here. So it is very straightforward. And this is where we get into the liquidity aspect of the financial markets, right? So right over here, you see the four landmarks of any candle, really, right? Whether that is bullish, bearish, doji, engulfing, whatever you want to call it, every single candle has these four landmarks, right? You have an open price, you will have a high price, you will have a low price, you will have a close, you will have a open, high, close, and low, right? These are the four landmarks that go into each and every single candle. Once again, you will find examples where there are candles that have no top wick or no bottom wick, but those are essentially outliers. They happen very rarely, and most of the candles do have um, a wick on both sides, right? It is very important to understand. So we're gonna be continuing over here, and I want you to ask yourself, look at this chart over here, and do not worry, we're gonna get into candle formation in a second. But this is your USD on the 1 hour time frame. This is the recent price action, what's happening lately. You can see this origin, whoops, you can see this origin block. Whoops, so we moved, we're getting essentially, okay, let's go back over here. You can see this origin block on the bottom, and I want you to ask yourself, how many candles over here, right, of this bit of price action that you see in front of yourself have the four landmarks, right? Which means a high, a low, a open, and a close, which is essentially every single candle. Now ask yourself, how many of these candles have a wick on both sides? Let's look at that, right? How many candles over here have a wick on both sides? You can see it's the vast majority of them. There's just some candles over here. If you look at these two candles, this one over here does look like the bearish candle has no bottom wick, and the bullish candle has no bottom wick as well, right? It is something that happens very rarely, but they do appear from time to time. But for the majority of candles, you will see that they have wicks on both sides, okay? And why is that relevant? Now I want you to understand a little bit of how candles print, because this is very important. Okay, so let's imagine this is a daily candle, right? This is your daily chart, and this is a how one of the daily candles look, just a very basic bullish candle. What I want you to understand is that within this candle, right, if it's going to be a bullish candle like it is in this case, it is very likely that price is first going to push down, and then it's going to start pushing up and creating that body, for the sole reason that the way candles form is that we have to have wicks on both sides. So if we want to have a bullish candle, we will need to create a tail at some point, and it's usually at the beginning of the candle. So this candle over here, right, if we break it down a little bit further, you will see, let's say you zoom into a 15-minute frame, this is your opening price. It is very likely that first price may have had pushed down in order to create that tail, right? That's then gonna start push up. If we're gonna be having a bullish day, it's then gonna start trading above the opening price and creating that body of the candle, right? Eventually, it's going to reach that high of the candle, which is this segment over here, and it's gonna start retracing in order to leave that and create that high and to find a closing price. Okay, so this is essentially how a daily candle would look if you actually break it down into the price action, right? You have the opening price. Because it's a bullish candle, we know that there is a higher probability it is first gonna push down to create and leave that tail, bottom wick, whatever you want to call it, which is this move down, to then push up and create the main move of the day, which is going to be your body of the candle. This is what you're aiming to trade, the body, right? That body is going to extend at some point in time. It's going to reach that high of the candle, which is this top of the wick over here, and it's going to start retracing back down in order to find that closing price right over here, right, and create that wick. And this is something that you have to understand about candles very well. And this applies to, once again, every single time frame. Okay, if you're gonna have a bearish 15-minute candle, there is a higher probability that that 15-minute candle is first gonna look bullish without a bottom wick, because it's creating, once again, that let's see over here, it's creating that top wick to drive down, right? It's first gonna look bullish with no bottom wick, most probably, right over here, and at some point it's gonna reach that high of the candle. It's gonna start retracing and it's gonna leave that wick, which is then gonna drive further down. It's gonna drop down. At some point it's gonna reach the low of the candle, and it's going to start retracing and pulling back again in order to have that candlestick formation. Okay, this is the main thing that I want you guys to understand, is that if candles are going to go, as an example, bullish, there is a very high probability that it's first going to go bearish in order to create that wick that's then going to drive in the opposite direction. And that's due to the fact that, once again, if you look at your charts, the vast majority of candles have wicks on both sides. And as these candles are leaving wicks, liquidity is being grabbed and taken in order to have fuel for that particular candle to move, right? The bigger the grab, the stronger the body of the candle is gonna look. As an example, look at this particular grab, right? This candle probably went down first. You can see how we went bearish first, left that bottom wick, and you can see the size of this wick. You know that a big move is on the way, most probably, because you can see the amount of orders that have been collected over here as price went down, right? And you can partner that. You can see trendline liquidity on a lower time frame. You can see POI mitigation, and now it makes sense into why this particular candle, which is a news related candle, by the way, I think this was FOMC, pushed the way it did, because it had all this liquidity to grab and go up, right? This is a very important piece to your trading, guys. You have to be looking at candlestick formation, okay? And we're gonna be continuing over here. Why does that matter? I think we went over this, but we can talk about this once again. If you know that 90 to 95% of candles printing have wicks on both sides, right? You can start utilizing that information to your advantage. As an example, let's look at an Asian range with that knowledge in mind, right? This is what we're going to be essentially focusing on right now. We're going to be looking at an example of a Asian range having that foundation of candlesticks in mind. So traders, before we get into the actual lesson of today, just a very quick word from our sponsor today, AAAFX. AAAFX is a regulated broker which has been in the industry for over 14 years, which gives you a lot of confidence when it comes to executing trades, depositing money, withdrawing funds, trading funds, as they're a very well known and very respected and established broker in the industry. They allow you to trade pretty much anything you want, including forex, indices, commodities, stocks, cryptocurrencies, and they have something that not many brokers have, which is a zero commissions account for forex pairs on ECN plus accounts. So if you're interested with them, guys, you will find the link in the description below. Use the link in my description to sign up with them, as if you do, you will be eligible for a 100% matching deposit using it, which is very, very good and not many other brokers will do. So once again, massive thank you to AAFX for sponsoring this video. And now into today's lesson. Enjoy the video. So let's do that. Let's remove that. And as you can see, this is GJ on a 15-minute frame. And you can see, right? So in this particular day, where the you can see where the blue line is where a new trading day begins, right? 10 till 12, we have Sydney range, which ends the daily candle, which is this box over here. And as you can see, this is where your new daily candle opens, right over there, right? And you can see, first, this candle went up. Very, very bullish, right? It went up. Good. At that point in time, right over here, the way that your daily candle was looking is like a strong bullish candle with no bottom wick. All we see is this, just a body that's bullish and that's going up. Great. Now, you come to the charts at that point, your expectation is that at some point in time, this candle should at least go bearish to create a bottom wick. Because once again, based on probability, look at your charts, 90 to 95% of candles do have a bottom and top wick. So if you have a scenario where you are in Asian and the Asian range is about to finish and all we have is this, right? Forget about the wick. There's no wick. This is just bullish movement right over here, right? You can anticipate and you can try to look for shorts because you know that candles usually have a bottom and top wick. And the probability should be on your side for it to eventually start dropping and creating that bottom wick of the candle. And this is where you start looking for your POIs. You can see we have an FU candle to the left, right? Right over here. Let's continue focusing on this daily candle, right? This is actually something that's very interesting. So at that point in time, once again, the candle was just absolutely bullish with no bottom wick. So you know, at some point in time, this is gonna drop down, as you can see, as we start trading below this candle low over here, it is printing that bearish wick, right? Now the candle is no longer looking like a strong bullish candle. Now you see a wick and you see that price is starting to go bearish, more than likely to start printing the body of the candle, right? You get that? Makes sense? Should make sense to you guys. And you can see this is where you get the majority of the move. This is where you should aim to trade, right? You have that segment over there, which is your body of the daily candle printing. Right, and as we said before, it's gonna reach a point where it's gonna print the low, which in this case is right over here, right? And eventually it's gonna find its closing price, which if we look over here, 12, well, we can't really see it over here, but let's imagine that this is essentially your closing price. Well, that cannot be it. This bearish candle closing is your closing price, and that's a new day, right? Once again, we do not have the complete information over here, so I cannot show you where the actual closing price is. But this should be pretty straightforward, right? In this case, once again, you would have the four landmarks of your candle, right? You will have the open, you will have the high, you will have the low, and just imagine that this is your closing price, right? So that's essentially how candles look when you actually break it down into the smaller time frames. And once again, This applies to every single time frame, every single time, right? The same thing goes. Just imagine that this is your 30 seconds chart, and what we're printing over here is a 30-minute candle. The same thing will repeat, right? It will first go up, create that high of the candle, then it's going to go bearish, it's going to create the body, eventually it's going to reach the low of the candle, and it's going to start pulling back to find that closing price. Okay, so with that information, we can continue. Let's look at another example on how to use candles for POIs. Let's look over here. This is something that I've drawn very poorly, um, which I apologize for. I did try my best, but I'm not the best at drawing stuff. So let's look at this scenario over here. Okay, let's imagine once again, just like it says on the top, this is your 1 hour time frame. Let's say you're looking at structure, you say awesome. Once again, very basic. This is bullish, break to the upside. I'm looking at this POI to go long, to potentially revisit this high at least, and then we'll see what's gonna happen, right? So that's great. Now you prepare yourself, and you see that once again, this is the 1 hour frame, that the 1 hour candle, this one over here, the one that's tapping into your POI, it's doing so without a top wick, right? This bearish candle just opened and went straight down, right? Well, what should you anticipate at this point? I'll give you 5 to 10 seconds, pause the video if you need it, but what should you anticipate if this is your bullish POI, if this is your 1 hour time frame, and the 1 hour candle over here has no top wick and it's just been pushing down into your POI? Well, you should anticipate that at least this POI should give you a reaction towards creating a top wick at least, because we know, once again, statistically speaking, more often than not, candles will have a bottom and top wick. So if this 1 hour, and once again, I'm just using the 1 hour as an example, but do not confuse yourself with time frames. They all apply to each and every single one of them. Okay, so if you have the scenario where there is a bearish candle with no top wick going into your POI, then you should anticipate that this POI should be responsible for at least a wick. And this is sort of the process that you see, right? You will see price taps your POI, it will start printing bullish price action on the smaller time frame, which is going to mean that it's going to start to leave a wick right over here. Eventually it's going to flip, and at some point in time it's going to start creating the body of that candle, which is going to be your main direction where you want to trade. And now it makes perfect sense, right? What is the probability that the 1 hour candle is at least going to go bullish to print a top wick, right? And if you're actually in the right direction, it will not only print a top wick, it will actually start pushing in that very same direction, right? Something that's very important. You have to be looking at how candles are forming and printing whenever you're trading the markets. Let's go over here. Candles, 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 right? That is essentially everything that you need to know about candles. Once again, once a new candle opens, there is a higher probability. Once again, this is still probability, not guarantee, for it to first move in the opposite direction in order to create a wick, which is also grabbing orders, to create the body, once again, to eventually establish a high for bullish candles, opposite for the bearish candles, and finally the closing price. Okay, this is very important because, once again, candles are just a visual representation of price movement. Now, here is how the four landmarks would look on a 30-minute time frame, right? Just another blank, plain, simple example. This is just another day. This is your Sydney range, which is the ending of the daily candle. This is where your new daily candle opens, right over here. As you can see, it first pushes up, creates that high of the candle, then eventually, right, we start dropping down, because if you see that there is no bottom wick, you can anticipate shorts, because you know that at least we should go bearish to create that wick, right? You see that example, we push up, create the high after opening, push down, eventually we create the low of the candle, and we close right over here. And this is how your daily candle looks, right? You will have a candle, let's see, that's looking like this, right? You can see we open over here, we pushed up initially, we created that wick, we leave that wick, we then print the body of the candle, we reach the low of the candle, we start retracing, and we close. And this is once again how your daily candle would look in a scenario of this sort. Okay, so you can start pairing these types of information with your daily candle understanding, with your timing of the market, with your structural plays, with your liquidity story, with your POI selection, right? You have to be putting everything into context and trying to make the best decision based on the information that's presented to you at the time of your decision-making process. So I'm not sure if we have anything else. Well, just conclusions and takeaways. Use candlesticks as a tool for anticipation, right? You don't need to go crazy with it, looking at every single time frame and every single candle. How is it looking? What's making sense? You just have to have a basic understanding of candle formation, which is what we went through over here. Look through your daily candle on a given day, right? Every time you're trading, look at your, just like when you drive, you want to check your mirrors. I just to say reflex, just to make sure everything's good. You want to do the same thing with your daily candle, with your weekly, with your monthly candle, right? Just check it every so often, see if things are making sense. If you come into the London session and you have an extremely bullish candle and there is no bottom wick, you can anticipate shorts, because you know that probability dictates that every single candle must have a top and bottom wick. Yes, there are exceptions where there is no bottom wick or no top wick, but that's okay. That's once again just outliers. They happen very rarely, okay? So if you go short anticipating a bottom wick and it doesn't happen, then that's just okay. It's part of the game, right? It's just the beast of the nature of the beast, right? You're not always gonna get it right, but based on probability, and you can do this anytime, open any chart, you will see that the vast majority of candles do have a bottom and top wick. Okay? Look to see if there are any missing landmarks. If there are, trade with that information in mind. Understand that majority of the time candles will first move in the opposite direction in order to once again grab liquidity and due to candlestick anatomy, and see how your major time frame candles look as price enters any of your POIs. Okay, that will provide you with a leg up. It's going to be something that's going to help you, and it's going to be something that's going to make you a better trader overall, right? So that is it, guys. I really do hope you guys enjoyed the presentation. I did try my best to get my message across. I think it did make quite a bit of sense. So guys, I hope you enjoyed the presentation. I did try my best to once again get the message across. Should be very helpful for you guys in terms of understanding candlestick anatomy as we went through it, and it was explained in a lot of detail. There's a lot of content that I'm gonna be pumping into the channel this ending of the year and these upcoming few months. I will be uploading structured content on various topics such as structure, liquidity, and things of that nature. So if you enjoyed this, leave a like for the algorithm, leave a comment. It helps a ton. And I appreciate once again you guys for being here. Thank you for being here, and I will see you guys in the next video.